SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's have a look at what happened yesterday and what's going on still today and the broader picture as well. So nothing special to be honest with you, because yesterday, even though I was saying we're still, you know, it's about a range, we close even on a 4-hourly basis around 21,400. Closures above there would be great. Also closures below 20,500 would likely be bad. Look what the hell happened yesterday. I mean, altcoins got completely T-wrecked, didn't they? Absolutely smashed. These are the sort of warnings that I've been putting out there for a while, especially for those who are a part of the Patreon. If you're not a member of that, £7.50 a month, 2 live streams a week. Link in the description below. But look where we are today, right? Despite the carnage that took place, mostly in the altcoin market, we're basically the same as we were yesterday, as far as, you know, the analysis is concerned. We are still in this box, in this range box. You know, we came to poked our head out to the top of it, liquidity grab, you could call it, all the way down to the bottom of it. You could call it, again, a liquidity grab. Liquidations, basically, from both sides of the spectrum. And we still remain within it on this 4-hourly. Now, the only difference, I guess, at this point now is that rather than surfing the upper side of the 10 exponential on a 4-hourly, just by the way, it's only a 4-hourly, we are now being rejected on the bottom side of the 10 and the 21 and the 21 again. So this does give, you know, small, I suppose, in favor of the bears, small, because on Bollinger Band strategy, we turn it on, the 20 simple moving average is sitting around 21,000 on the 4-hourly. Just turn that off, we just don't need that. But the 21 exponential is a good center as any to go by, which is this grey here. So I mean, as far as the continuation of this particular move is concerned, the bears have the upper hand to the tune of 65%. That's the statistical probability of it remaining in this bottom portion of the Bollinger Band, and it's not the greatest stats you ever had, but it is stats in favor of continuation of the downtrend. So and again, only on this 4-hourly. If we take it to a daily, completely not the case at all. The bears don't have a chance in hell over here on the daily, and so we've got to respect that. Where's your center of this Bollinger Band? All the way down here at 18,500, which was one of the lowest targets. Almost feels unreasonably low now for us to come back down to that level, although you can't rule it out because anything is possible. So as far as the short-term timeframes are concerned, we are still range-bound with the view of potentially retesting the lows before we retest the highs. But again, it is a range, so we should really expect the whole range to be tested. But as far as today's concerned, I think that the majority of the downside has played, and unless traditional markets are going to show us anything significant, I think we're just going to stay range bound, to be honest with you. Getting picked up around the 20,500 zone, getting rejected from the 21,500 zone, so still range bound. Pretty boring stuff. Same deal again for Ethereum. It's exactly the same thing. We were stuck in a range yesterday for Ethereum. Came back up to the top of the range. For those who are members of the Telegram, I did show some of my positions, or my epic position, to be honest with you. I did 100x from this area, because what I was saying yesterday, I said it's range bound, really. It's range bound. It doesn't take long to know if you're wrong when you're stuck in a range like this. So I took a 100x, which is something I'd never normally do, but in situations like this where it seems pretty clear what's going on, it was worthy of taking it. And another one I took where I've closed that as well. So yeah, it did. Yesterday was decent for margin leveraged futures trading, but for today it's not quite as clear. We're still in this range low being around 1,440 or so, and the top being a nice flat figure 1,600. So again, we're still range bound with the bears in the control of the shorter term time frames being the 4-hourly, but again, it's not offering any real major move as far as me looking to take opportunities on any of this. Just got to see where it goes. We want to see if a range breaks, and that's what the video was about yesterday. People, I think, like to look at the thumbnail. You said 25,000, it's going to happen. I said, yeah, 25,000 if we break these ranges to the up. It wouldn't be 25,000 if we break the range to the down. We're range bound, just like yesterday's video. Please remember to watch the videos, right? Thumbnails, that's not what YouTube's about. Right, so let's have a think about traditional markets then. Now we recognize that we're more or less in the same boat as yesterday with potential retests of those lows. Let's think about the euro. So the euro is all over the place. It's all over the place with CPI for Europe coming in pretty good, really. So it complements the bullish posture in the chart. The golden cross, in my opinion, still wants to be retested. I would probably say a bit more of a bullish retest at this stage now than going all the way down to the 200 exponential. I'd be looking for this 50 to be tested at some point, and at the moment that sits around 105.5. So I mean, we're looking for the euro to remain relatively strong. It's survived so much bad news, and now it's sort of having a bit of a move on the back of some good news. The only thing that's going to hurt this chart or bring it down on a fundamental basis, I would say, would be something from the Fed. I think it's the American markets which is going to impact this, because the European markets the European news, should I say, all the things that have come out for Europe, which would have normally impacted the euro, and if it had been on the shoe on the other foot, and this news being about the dollar would have dumped hard and fast, and the euro has withstood it quite well. So it's withstood the bad news, and now it's sort of like recovering on the good news. So it's still looking like it wants to continue to go up, but again, a bullish retest based on the chart is what I would expect anyway. And again, if we look at these daily candle bodies and the wicks, sorry, we do seem to be struggling around 108.7. So we'll see if that becomes another problem again for us if we retest that again today. And based on today's chart, kind of looks like that is a possibility. We did have 2 drives of bearish divergence. We might be looking at a third drive. If that is the case, we get a third drive of bearish divergence, then I think that would be the one that we look to short, with the view for it to come down a bit further. 106, maybe a little lower, but let's not get too excited. Now the main thing to think about really is this. This is the main thing. So again, it's neat. It's very neat and tidy. Rejection. Anyone can see this, right? Everyone can see this. And we're looking at this on a daily. I've not got any indicators on. There's no real need to look at trend lines on this one. As far as I'm concerned, again, I say it every week now, every day of every week, I believe the bottom's in for the S&P. So to see this getting rejected from here, like I've been saying, and like I reiterated yesterday, is what you should expect. But it doesn't mean that it's going to make a new low. It's not what it means. I think that the low is actually in for this bad boy now. And so this rejection here could be picked up at any level. We could be looking at for it to get picked up at this level here, this intermediate zone here, where we found the supports, the resistances, the supports, the breakdowns, the resistances, the supports. That's where we could be looking for. And that is more or less now. More or less. And if that breaks down, we've got another major support around here, which is a bit more strong, where we found the supports, big bounce from there, supports, resistances, supports, big bounce there, resistances, and so on, and a fair bit of wiggly room around here. So there is a lot going on this chart, despite how clean and crisp it looks. I think the expectation for a lot of people is that we just reject from here and come down to new lows, continuation with the bear market. I don't believe that's the case. To be honest, I really don't, and that's why I've been touting this area as the bear market bottom for the S&P, which will only add more weight to everything else going up over time. So I will keep a close eye on this, and I would actually, depending if I see a decent reaction, feel that this might be an area to try and scale into a position for the S&P on a futures perspective. Definitely a futures and derivatives perspective, which is what this market has turned into for me, really. Not looking to really add loads of things to my stock portfolio or my pension or anything like that. Not yet. Not until we get out of this bearish formation. Then I'll start to pile on some stocks, for spot positions. At the moment, it is very much a futures market, really. And there's still lots of things going on behind this chart, but as far as the chart is concerned, it's clean and crisp, and that's what we like, and it allows us to trade things with a little bit more validity than we would do any other chart, like an altcoin chart, for instance. Like I was saying yesterday, and I was saying on the live stream that we were doing on Tuesday, I said, look, there's a lot of really nice setups here for altcoins, and they still exist at the moment, and despite pulling back to these big areas. In fact, if anything, they're probably decent opportunities right now. When we were on the stream on Tuesday, I said, look, I mean, a pullback on a buy the dip sort of opportunity is what you kind of want, but a lot of these altcoins were saying that, you know, the next area of major significance to be pulled back into is about 12 to 14%. I think a lot of altcoins actually saw that yesterday. But yeah, I mean, long story short, nothing has really changed for the grand scheme of things. I'd still be favouring a pullback on the euro, just based on its chart, regardless of the fundamentals. I'd still be looking for a bounce on the dollar, regardless of its fundamentals and the descending trend that we're in right now. Japanese yen's all over the place. I put something on Telegram yesterday about how it seems a little manipulated, and you manipulate a currency pair like that, you're going to impact all markets really, because it's a big one that feeds into the Dixie. And in fact, if you know, not that I mean, we can do it, but the correlation between the yen and the Dixie themselves, I mean, if we just turn off all the noise and have just a quick look at the charts themselves, they do kind of look relatively similar. And this is a cleaner chart to trade than the Dixie, because the Dixie is obviously, you know, it includes a lot of other currencies to it, but this is one of the better ways to read which way the Dixie is going to go. And at the moment, it's going to continue downtrending until there's another retest of this low, I reckon now, and then we might be looking for a sizable bounce, and that is the bounce on the dollar that I've been expecting for a little while now as well. But it doesn't look like it wants to bounce here. Let's face it, it doesn't look like it wants to bounce here. Not with the euro continuing with its strength and the dollar continuing with its weakness. Either way, I will leave it with you there. There's no need to go any further about this. So when it comes to Bitcoin and crypto, it's held up quite well. We do have you know, the idea now that we're going to scrape these lows once again, and we'll see if we close 4-hourly candle bodies below this 20,500. That might add more continuation to, let's start off with just above 20,000. And breaking down below there, we'll be moving into the 19, so we'll see where we go, because it could be a free fall back down to a really significant area on the chart. But for the moment, we are still range bound, just like yesterday. It might not feel that way because it was a devastating move for altcoins generally, and so people think that this is it, this is a crash or whatever, and it could be, maybe it could be, but if it is a crash, it's really not got started yet. The start of it is well, this isn't even the start, because we're still in the same range as we were yesterday. Anyway, I will leave it with you there. Thank you for watching. Hope you have a nice day. Take it easy.